What's up, everybody?
On.
How you doing?
Morning.
Good. How are you?
No, had such an interesting conversation and an interesting happening over the weekend when I was hanging out at our local spot, and it just triggered so many things that I think are super important to talk about, and I thought it would be fun to get together and discuss it a little bit. And you have these candid conversations, just these natural conversations with people you meet in public, at a restaurant, wherever, and it's so interesting what that can turn into. And I met this couple, and they were very excited, relocation for a job, great opportunity down to Texas. And, we just start talking about their move and what they're doing and their plan. And they're like, it's crazy. We had the realtor over, we have to get everything ready to go and like on the market, get our house on the market in the beginning of January, like right after the holidays. They were like panicked a little bit.
It's a stressful time,
right?
Just in general.
Right. And we're, just diving into it. I'm like, that's awesome. Where are you guys going? Where do you live now? Obviously knew the neighborhood.
Yeah.
And they have, nice townhome in a nice neighborhood, Parkland School District, ideal location, all those hot spots people love. So they're like, we can't believe how much, equity we have in it. We bought it when it was new, have the finished basement, just all the things. Right. And, in my head, I'm thinking to myself through the conversation, he's talking about how cheap it is to live down in Texas where they're going. They can't believe what they're going to get for their money, all these things. And he keeps focusing on, my realtor said we get on the market right away. We can sell it for this. And the more we talked, the more in my head, I'm thinking like, did the realtor at any point in time say like, do you want to actually sell your house?
Yeah.
Is that the best plan for you moving down there because of what you're sitting on?
As I was thinking, when you started talking about it, I was thinking the same thing. Like Parkland School District, townhome, it sounds like an opportunity that you can hold on to that.
Right.
As a portfolio piece.
He looked at me stumped, like, wait. And it was so interesting to me because within the next couple minutes of just breaking it down for him, saying, there's a cash out refi option. There's a home equity line of credit option. He's like, oh, we actually already have a home equity line on it. I'm like, okay.
All right.
Now we're diving into it. He's sitting on that 3% interest rate on his main loan with a very small balance, very low payment.
Yep.
I'm like, have you ever considered, I would love to have an investment property. I'd love to have a rental.
Cash flow.
And like, it was just amazing to me in that short period of time, what I was able to open up in his mind for what options he may have. And it just made me think, wow, this is something, we need to talk about more. This is something I should dive into a little bit more because there's probably a lot of people sitting in his position.
Yep.
I don't know what he's going to do. Obviously, I'm not going to step on anybody's toes. He's got an agent. I wish the agent would have proposed that to him. That's disappointing to me. We should be doing that in our position more often, not just going for the sale. I'm not saying that's what the agent was doing. Maybe it just didn't dawn on him that this could be an option because they're moving to Texas. But it's just having that conversation. I was asking them all the questions like, do you care if you manage it from out of state? Would you hire a property management company? He was like, yeah, all those things work if the numbers work. I'm like, exactly.
Yeah.
So it was very interesting to me. But, then we looked at, I started breaking it down, looking at some stats and some things with, my stat guy over here, Rob. And it's crazy the amount of equity, the amount of options just the average homeowner has right now.
Yeah. That's what I think, Rob, you said you had some stats on that, I think.
It did, yeah.
For the average amount, or
so
you were looking at stuff.
Yeah, so in this country, 73% equity actually is the average amount, and then 50% if you do own your house, or if you have a mortgage is 50% of that, which equates to about $299, I believe.
$299,000.
No, is that?
Yeah,
$299,000. Is the average dollar amount of equity. Wow. Yeah. So that's where I think it's deceiving because 73% equity on average. That does calculate in. There's a handful of people, certain generations, that own their home outright, right? Yeah. So that's an interesting stat. But to break down that people with a mortgage still have 50% equity on average, is wild.
And that is about right. I'm thinking too for people that come in for what I do on pre-approvals, and if they have a home, yeah, that is about right for what they're going to have. That's where, and going into 2026, those conversations that you had, which I'm thinking is probably at the Shelby.
It was.
Shout out to
100%
Shelby.
the
Yeah,
Shelby.
come on, everyone's there. That is, and especially in the Valley. I mean, so many people have that and using it as a tool.
Yeah.
Instead of just maybe that other agent was like on autopilot. You know,
And that can happen, and that I understand that part of it. And, I think Rob and I, especially, we just are always trying to be creative. It's not necessarily always just about the sale for our clients. It's what is the best decision for you? What is the best move?
And I love that story, Frank, because I think you took something, as easy as just selling your home to just shifting that mindset to, having equity on your home and it being an asset.
Yes, keeping the asset. So often, I mean, I've had it happen before where I'm sitting with a client and they're shocked. They're like, "Wait, are you talking me out of selling my house right now?" I'm like, "I sort of am. I don't know why I'm doing that." No, and that's why, because I think if it's in their best interest and it's something that they are interested in doing, I did it with my own cousin and her husband. The one time I talked them out of selling their condo, and they were so happy that they made the move that way, and it's worked out great because now they're starting to build a a real estate investment portfolio off of this one condo and then their second house that they bought.
Yeah.
And that's what it can be for people if they want that. I understand not everybody wants to do that. They don't want to be landlords. They don't want to mess with that. They'd rather invest their money in different ways. That's fine. I just think it's important to have the conversation.
Yeah.
Ask the questions because it's not always that simple. And I think that's important for us to remember where we sit. We have a responsibility. Like this is likely their largest asset,
Absolutely.
right? We talked about that before.
Yep.
And do they want to leverage it in a different way rather than just pulling all the cash out? I mean, they're going down to Texas, these people I met, and they're like, it's so cheap down there. Like, we could not sell, we could pull X amount, just put a hefty down payment, still have a super comfortable monthly mortgage payment and potentially keep the asset. And I think a lot of people, I mean, listen, it's been crazy since COVID, right?
Absolutely.
The amount of equity that's been gained just since 2020 for most people is pretty wild. And I think there's other aspects of this too that can just be simple for somebody to say, hey, how can I improve my overall life? And one of those big things is credit card debt.
Big time. Yep. Debt consolidation, credit cards, and even like car loans. Have you guys seen? I mean, I had a gentleman that came in for a pre-approval with us that we're working on. His car loan was like $1,800 a month on this. I mean, to each your own, but my gosh.
I mean, that's the thing. Cars have become so expensive, right?
Yes.
I mean, just an average car nowadays is way more expensive than it used to be. And the rates on that are higher just like they are on anything else.
And they're always, even with being adjustables, so what we looked at with that gentleman was, like you said, a HELOC or a cash out refinance. You can consolidate a lot of those debts down into something that then is a deduction on your tax returns. Right. You got a home equity line of credit, you can deduct that off your taxes and most likely drop. So it's just people don't think outside of the box on those, or they don't know. But that's to your earlier
even
about
with
being
how
advisors.
high rates are on a HELOC or even on a cash out refi, it's a lot better than 28% on your credit card.
Absolutely.
Yep.
And you don't get any tax benefit at all. And so people don't understand those HELOCs are tax deducted. It's a mortgage on your home. And you can use that again. When you pay that down, you can always put it back. And there's multiple products for that.
Right. And then that's open. They have that equity they can keep tapping, and they pay it down. They can use it for someone else. Use it for a vacation.
Absolutely.
You want to take your family away and do something that's extra special one year. You're sitting on that. Pay it off over time with your HELOC. Throw it on there if you have the room.
Absolutely.
There's lots of things. The home use. Obviously, most people talk about use it for the home improvements because then it adds value to the house.
Correct.
Which is another option. But there's so many different things that you can do. But especially to me, right now, I know a big thing is credit card debt because credit card interest rates are so high. And I know people's credit card debt on average is rising, 25 going into 26. Stats guy, you got some numbers for me?
Yeah, I believe the average is around $9,300.
$9,300 per household in credit card debt, which is on the rise too. And again, that can become twice as expensive if you're making those minimum payments.
And that's
if you're not paying it off.
And that's just credit cards. Then you don't have. I've seen it a lot between four-wheelers, motorcycles, car loans, especially. Student loan debt.
Student loans, right?
My gosh, all those things.
Sure.
And that's the whole other thing too. Student loans. You can't get out of student loan debt. That doesn't go away ever. Lots of talks about the forgiveness and overall though, if you're a normal person who has student loan debt, yeah, you might have $30,000. You can pay that off. Again, use the equity, use something different, and on top of using equity to buy the other house, just using it. People just don't know how to.
Yep.
That's
They don't
the
realize, the options, and listen, sit down with Matt, right? I mean, that's the key. The numbers guy over here, get into the lending side of it with him and see what the options are. Home equity lines of credit are obviously becoming popular, right?
Oh, all day. Like we have 3 different companies that we partnered up with to do those that we didn't have 6 months ago.
Great.
Because and a lot of them are very driven in the fact that they don't need appraisals. They take everything off of your bank statements online. You log in with a lot of your passcodes in the IRS. You really don't need any documentation for these.
Okay.
They're really easy. But I did want to hit on one other thing too, because a lot of people with renting your house have property management companies and things like that. You guys have that too, right?
Yes, we do.
You have all of that so what is that in detail? If someone is thinking about holding on, because that's in my world, I've had rental properties before I've never had a property management company. Now thinking about it, you saying it, that would take a lot of burden off my back on what all do they do then?
Yeah, absolutely. Yeah, our in-house, we have Valley Partners Property Management, and honestly, it's tiered. It really depends on how you want the property management company to assist you.
Okay.
Somebody like the people going to Texas, I would think they would probably take the full service because then it's just hands off. They're just collecting their money every quarter based on profit. And the property management company literally does everything from there. They place the tenants, they collect the rents, they handle emergency calls.
Oh, wow.
Literally everything. You don't have to have that. That's obviously the most expensive of the options, but there's other options there too. If you just want us to place tenants for you, right? Find qualified tenants and place them and write leases, there's that tier. There's different tiers depending on how much per month you want to spend, and it's a percentage base off of the monthly rent that's collected. So it's reasonable.
It's an a la carte thing. You pick what you want.
Exactly. You can tier it that way to kind of give yourself the option. From our standpoint, from the property management, obviously we want the full. It's the best case scenario for us. We make the most money, but then we have control over how it's going, which we like. Definitely is ideal from that standpoint. It's our contractors, it's our emergency people, it's our plumbers, it's everything we know going in to kind of handle it full service for you. It's probably the best option. Yeah. But it is the most expensive. But you you pay for what you get. And there's definitely value there just to not have to worry about it. Yes. Especially if you're long distance.
So those tenants then, if they have problems or questions or anything, they usually go right to the property management company.
Correct.
That's those people, those clients that those people you spoke with that were moving to Texas.
Yeah.
So they just get calls when they need it from the property management.
Exactly. It's if there's extenuating circumstances where there's a bill, there's something that has to be fixed that's over X amount of dollars. Okay. We just have to approve it with the homeowner. Okay. Before the work is done.
That's nice. Not a lot of people have that, and a lot of places have those, and a lot of people don't know that they're available.
Correct. That's a big part of it too. They don't realize what the management company may be able to do for you, just to take the burden off of you a lot of times too. Yeah. I've heard that so many times. Oh, I don't want to be a landlord. Okay, there's an option for you. Keep the asset, but you don't have to be a landlord.
Yeah, that's true. Yeah. I think before the holidays here, getting into next year especially, this is going to be more and more these talks. I'm excited to have like halfway through next year, January, February, more like June, July, having these. Hey, remember that video we shot back in December?
Hope, right?
Yeah, and come back and say, here's the stats going into it. This is how many, because I'm going to be looking at it this year. How many clients are doing this? Yeah. Because it's going to be rinse and repeat on having these talks and being, you said too, being advisors instead of just not that realtor. That's a big job, but taking the extra step.
Yeah, I think that's super important.
Very important.
I think we need to be focused on that. As agents in this business. Especially these days. I mean, there's so much change, so many things that have been happening in the industry, and we need the consumer to understand that we're not salespeople. We really are advisors. We're educators. That's what we do, and we're here to take you through the transaction or just make sure you're doing what's best for you. And sometimes that's not selling your house. Yeah, in absolutely. Certain situations. So that conversation can be had, and we're happy to do it. Like we said before, we're happy to plan with you way ahead of time. We're happy to, think outside the box. We're happy to, try to come up with where your money makes the most sense and, help you build. I love the younger buyers right now. I think are savvy on the investment side of things too. I think they want to be real estate investors. They know the advantages for long-term wealth. And that can be something that you do too. You start to leverage that first property you buy, right? To try to build a real estate portfolio as well. There's lots of ways to do it,
Absolutely.
Still need to have Mike and Afton in. I keep saying I got to get them in to tell their story because that's what they did. They built off of, just owning 1 or 2 homes, and they're in an amazing position.
I think next time we get together, that should be something.
Yeah. Yeah, they said they would do it, so I got to get them in here.
Right. Well, thanks for talking today.
Yeah.
It was a lot of good insight.
Yep. Thanks for having us again.
Yeah, thank you.
Partners in Property are here for whatever you need, all the real estate needs.
Give them a call. All their info's at the end, guys.
Thanks.
Bloopers.
What'd you do this weekend, Frank?